Home sales have started January at a pretty brisk pace. We're watching the data for more signs that home buyers are responding to the lowest mortgage rates in 3 years. This week did not disappoint with the count of newly pending home sales jumping 11% over the same week in January 2025. Sales rate improvements over last year are not difficult. Last year's sales were clobbered by much higher mortgage rates. And I have been expecting that sales will be climbing this spring, but we need to watch the data each week to make sure that's true. This week had good data. Of course, 1 week is not a trend, but this week we counted significantly more newly pending contracts than last year. Even as home sales pick up, there are still plenty of pressures on home prices. In fact, one reason likely that home sales have been improving is that home prices are down in key markets. So we can see some bargain hunting for the first time in years. The recent pricing data leads me to believe that even if home sales continue to improve this spring, home prices do not have a lot of upward momentum. So we want to watch home prices, not just sales volumes, to get the full picture of the housing market in the spring of 2026. So it's Tuesday morning now, January 20, when I'm recording this, and interest rates are headed higher today on news of more trade wars. So keep in mind that any bullishness we see in the data is probably very fragile. Mortgage rates have headed lower in recent months, but there's no guarantee that they won't flip back up. So with that in mind, let's dive into the data for the middle of January 2026. So let's start today with this week's newly pending home sales numbers. We counted just over 50,000 single-family homes that took offers and went into contract this week. That's 11% more sales than the same week in 2025. Home sales seem to be responding to the recently lower mortgage rates. In this chart, we have last year's weekly pending home sales line in purple and this year's start in blue at the left end of the chart. See the 50,000 newly pending contracts now compared to 45,000 a year ago. The blue line jumps out ahead here on week 3 into the new year. Now, 1 week's not a trend, but it is better than the alternative and not surprising either. Last January, mortgage rates were jumping higher. So potential home buyers last year got slammed with very expensive money. And the opposite trend has been happening recently. Mortgage rates are suddenly at the cheapest they've been in over 3 years. That means thousands more people are able to buy homes now than a year ago. Last year, the brakes were on hard as the cost of money was just so much higher. So this year has notably better conditions. The recent week's average has been about 5% more sales happening now than a year ago. We're forecasting 5% sales growth overall in 26 over 2025. Much of that growth will come in the next few months if we're lucky and rates stay near 6% or even dip lower, then this momentum should continue. As we move a little past the holidays, it is now really the first opportunity to read any measure of buyer demand in the data for 2026. So that measure of newly pending sales looks good this week. It's 1 week of data, but the data came in strong, so we'll take it. In a healthy market, we'll see the number of sellers grow along with the number of sales. That is, we'll see the new listings count climb each week with the pendings. So the next bit of good news we have is that we saw 50,000 new listings for single-family homes this week. That's 10% more than the same week a year ago. In this chart, I'm showing the weekly new listings levels. Each line is a year. At the left end of the chart, the blue line for 2026 is peaking up above recent years. It's only a couple of weeks into January, and you can see how there are plenty of ups and downs to go, but a few more sellers this spring I will interpret as a positive sign. In a healthy, growing market, we want more listings this spring, as long as it is accompanied by increasing pending sales each week too. As of now, this is the pattern I expect for 2026. Rates have been down. Payments are more affordable than they've been in 3 years, so I expect some increase in sales. On the other hand, it is important that there is no big jump in sellers each week. So a nice, healthy increase, but So it's only 50,000 single family homes this week. We want to see 60, 70, 80,000 per week in the spring. Some people are still on the sidelines expecting a huge market crash in 2026. To get a huge crash, we'd need to see the new listings jump big quickly and watch the pending rate sales rate fall. So if there's a crash scenario, you need more supply and less demand. We've had neither of those conditions as of now, but that is a trend to watch for if, for example, rates change because of policy conditions or macroeconomic conditions changing. Let's look at the overall inventory of unsold homes on the market. In addition to the new listings each week, there are relist properties that come back on the market in the spring. These are not new listed, they were listed last year, delisted, and now relisted for the spring. In the data here, we call it a relist if it was on the market sometime in the last 90 days. Many MLSs let you withdraw a property from the market for 30 days and then pretend it's a new listing. So we will not track those as new in this data, but as relists, but they'll add to the total inventory. So this week we counted about 71,000 relists that make up the active inventory now. That's 10% of the market, and that number will climb as high as 100,000 or so relists in Q1. So between the new listings and the relists, there are now 696,000 single-family homes unsold on the market. That's a 1.3% increase over last week. It's a pretty healthy increase for the middle of January. It's not uncommon to have a few up and down weeks of inventory in the winter here. Most years, the lowest inventory reading actually comes in early February. In weak demand years like last year, when mortgage rates were 100 basis points higher, inventory can start climbing now. So this week saw an uptick in inventory. It'll be super interesting to watch inventory in the next few weeks as one gauge of where demand is. My suspicion is that inventory will bounce around this 690 to 700,000 homes mark for a few weeks before starting to climb in February. There are 10% more homes on the market now than last year at this time. And here's something that might surprise you. Florida, as of this week, has zero inventory growth compared to last year. No inventory growth in Florida. Next week, Florida could have negative inventory versus 2025. This market is very different from a year ago. When I'm watching the demand levels, I'm focused, especially for the next few months, on the price reductions data. As of this week, 34.2% of the single-family homes on the market have taken a price cut from the original list price. It's still more than last year at this time, however. In this chart, each line is a year. At the left end of the chart, the blue line for 2026 is still above last year's purple line, indicating there are more homes on the market now with price cuts than there were last year at this time. Even if demand picks up relatively stronger this Q1 compared to last year, there's still a lot of homes on the market that have already done their price reductions, so that will take time to transition into completed sales. If demand picks up quickly, the blue line will follow the pattern of 2023's yellow line and decline below last year. You can see that pattern in this chart here. This says to me that we still have price pressures driving this market. Even as home sales pick up, prices remain flat for most of the country. So if you have your house listed for sale this spring, you may be getting lucky as buyer demand improves. This data shows us that sellers, though, need to be pricing wisely so they don't get behind this curve. Buyers are still very price sensitive. This seems likely to remain true all year. If mortgage rates were to jump back up, the data tells us that home prices would be likely to drop down as a result. Let's round out the data today with a view of home prices. As I mentioned, most of the other data this week shows pretty bullish demand by home buyers with growth over last year. I expect home sales price data to be the slowest to respond to any increase in demand. One of the reasons that sales are increasing is because there are some bargain hunters out there finding deals with lower prices and motivated sellers. So as demand improves, that shows up in unit volumes before any price resilience. That's my expectation for this spring. Asking price per square foot, the ask price, is maybe the most clear example of these price pressures. That's what we're showing here. So the median price per square foot for homes on the market is 1.4% lower now than a year ago nationally. That's the blue line at the left end of the chart is below the purple line from last year. In fact, prices by this measure could dip below the 2024 levels as soon as next week. And you can see that in this chart. The trajectory of the blue line is aiming below the 2024 orange line. So this chart also really illustrates the pricing pressures, the pricing weakness from the end of 2025. And that's why I say that any renewed demand by buyers has a long way to go to make prices bounce higher. The median list price for all the homes on the market is just below last year at this time at $419,000. The median price of the pendings, those homes going into contract to close, is still just fractionally higher than last year at $380,000. So that's the pattern we've been sharing recently. Some measures of home prices are below last year. Some measures are just barely above last year's levels. So there's no signal in the data that prices are turning higher with new demand. In fact, my suspicion is that we have continued momentum for lower home prices nationally, especially if the latest news ends our mini mortgage rate boom that we've had for the last few weeks. So stay tuned for that. Never a dull moment. Back next week with more data.